Hi, this is Kerry Artak with Wicked Stocks bringing you a timely update in the TLT. That is the iShares 20-year Treasury Bond ETF. The TLT is the higher volume Treasury Bond ETF. It does, it's used by investors to gain exposure to long-term U.S. Treasury bonds, 20 years plus. It is the long-term interest rate, so there's a high correlation. And so with the recent settlement last week for the first time, above this 5-year channel top at 86.90, we are now seeing a buy signal in the TLT that obviously correlates with inversely lower interest rates for the foreseeable future. Until this buy signal, as you may recall, if you've been following this series or these updates for the last few years, we'd mentioned the likelihood of continuing to fill out this wedge between what is a 2-year channel bottom and a 5-year channel top. And 85.18 is the 2-year channel bottom. Is that 2 years? Goes back to October 23. Yeah, just about 2 years. Had we settled below 85.18 by a full 1% margin, that is the red line that we've tested repeatedly in the last 4 or 5 months, then we would have had a sell signal in the TLT expecting higher interest rates. Obviously, that's not what's happening. We closed above the 86.90 formation by the required 1% margin, which is the green line, and we are now anticipating, as you might imagine, lower rates. Ultimately, I think there's a solid case to be made for this 102.18 2-year channel top. This would be, and I mark it here, roughly a 17.5% rally from the present price point I use the upper 80s, 88.56. So a 17.5% is right around, if you take a look at these notes, a 16.5% move in the TLT typically represents a 1 to 1.25% move in long rates. So essentially what we're looking for is a 1 point plus reduction in the longer term interest rates in the order of 1.25%, possibly 1.5%. Now, this could take, this from here, from September of 24 to this low, let's say, was May of 25. That was, about 8 months? This could be 8 months. This would take us into the late Q1, early Q2 of next year. So this is not going to happen immediately. We're already factoring in about a 1.5 point reduction. At least that's what I'm hearing in the news and by the experts. And that takes us to the 92.05 channel top. So I do think, probably by the end of September, end of October, we should see this 92.05. This is a structure that goes back, about 8 months. Once again, 8 months roughly. 92.05 can contain buying on a weekly, possibly monthly basis. So I present these levels for those of you who actually like to trade the TLT. And you can trade options in the TLT. And right now, it's suggesting exit your long puts if you own them and consider buying out of the money calls. Or selling puts, whatever the case may be. But if you buy calls, you might reach for 92 strike out of the money calls that don't expire. This is a 2 to 3 week play, 3 to 5, I'd say at the most. So you want to go out twice the distance in expiration relative to the perceived time that it would take to reach your objective. In other words, if this takes, let's say, 4 weeks, you probably want to go out 8 weeks on your expiration. That's just a general rule of thumb that keeps the out of the money call from decaying entirely to nothing by the time you reach it. But you don't want to go a year out because you're paying just too much money for something that's unnecessary. Anyway, enough of the options trading 101. Of course, if we were to close above 92.05 over the next month or two, and it is expected, I do think, and I'll take us back, to this chart. You've got this rounding bottom, this longer term drawn out process. I could see this saucer just continuing in like fashion out to about here. That takes us to February of 26. And I'm not about to anticipate it's going to be February 26th. I'm just saying that takes us into the first quarter of next year, and it could take us into late Q1, early Q2, as I mentioned before, where 102.18 is an objective, and I think you can trade that as well. This is probably, as I say, like an 8-month rally, for instance, a 9-month rally. So once again, if you're going to buy 102 strike out of the money calls, you want to go out a year, year and a half on that expiration just to preserve your delta, reduce the time decay theta element from the equation. That is the big picture on the way up. Once again, I'll show you this chart. 92.05 is our near-term target. If we close above 92.05 in the coming weeks, and this, by the way, I can tell you this right now, this is dropping 9 cents a week. So you see that yellow box? You can do the math yourself if you like. If for whatever reason I get busy and I don't provide this, I do not do the TLT on a weekly basis. Just I watch the charts, and when we get a signal like this, I'll throw out an update video. But next week we have 92.05 this week, 91.96 the following. So it's dropping 9 cents a week. If 3 weeks from now you can do that calculation, it'll be 27 cents lower than 92.05 on a week by week basis. If we close above the structure, then we've got a 2 to 3 month rally, looks to me, to 102.18. That's the accelerator. Closing above 92.05 actually accelerates upward momentum with 102.18, then likely inside of 2 to 3 months, where I might add we could top out on a quarterly, possibly into later 26 basis. If in the coming months we were to close above 102.18, well, that's another story altogether. Then we're in a protracted, longer-term interest rate reduction. I venture to say some sort of an economic collapse or some sort of a deep recessionary environment. That's what I would anticipate, but I could be wrong in that respect. I think that pretty much rounds it out. I have said it all. Let me say one more thing. If we do close this week back below 86.90, then we're expecting another retest within just a week or two of 85.18. And if that happens, I'll provide an update video giving you what would be the criteria for a long-term sell signal if we were to close below the 85.18 structure. But right now, it looks to me like we can expect higher trade, that is lower interest rates, as we move through the rest of the year and through the first quarter of next. I'm going to leave it at that for this particular Wicked Stocks video analysis on the TLT. You have a great week.